guys. I hope that I find you well and you're busy studying. All right. So, in this paper, this is an extract from the NSC June for the year 2023. My focus is on the director's fees adjustment. Okay. This one here. And it reads the company has two directors who were appointed in 2019. So, here they're just trying to tell us that these directors have been there from the past. Okay. A third director was appointed on 1 October. This is now recent because our financial year ends in February in the year 2023. Okay. The directors all earn the same monthly fee. Directors' fees paid during the financial year have been recorded, but one director has already been paid for March and April. That is the biggest challenge that we have here now. That one director has already been paid for March and April. So we have a prepaid expense. We have a prepaid expense in our hands. Okay, so let's go. Two directors. So let's start with director number one. Here's the first director, and here's the second director over there. Two directors. These are there from the past. And then a third director is appointed. So here's a third guy that is coming to the picture. And he's coming on the 1st of October. So if he's coming in on the 1st of October in the year 2022, and the financial year ends in February until 28 February the year 2023. So we're going to count. It's going to be October, November, December, January, February. So this guy has been there for 5 months. That's what it means. Directors' fees paid during the financial year have been paid and recorded. But one director, let's assume, is this guy here. Okay? But one director, we're told, one director has been paid for March and April. So this guy here, we paid him for 12 months, but we went further to pay him for March and April. That means in total, we paid this guy for 14 months. But this guy B here, we just paid him for 12 months. So we then realized that we've paid 14, we've paid 12, and we've paid 5. So in total, if we are to add all our months, we then see, that we have paid 14 months for the first guy, 12 months for the second guy, which is B, and then 5 months for the new guy who has just joined. So in total, we paid 31 months of director's fees. So it therefore means when I look at my director's fees of 2,015,000, that is equal to 31 months of payments. 31 months of payments. So I can then say my 2,015,000, I can divide that by 31. Let's see how much we're going to get if we do that. My 2,015,000, I divide that by 31. That's going to give us 65,000. So it means my director's fees per month is 65,000 per month per director. Okay, so it's 65,000 per month per director. And we know that there's a guy whom we've paid 2 months in advance because there's 14 months there. So it's going to be my 65,000 per director multiplied by the 2 months that we've paid in advance. That's going to give me 130,000 in total, which is my prepaid expense. Now, I can come now to my statement of comprehensive income. Here's my statement of comprehensive income. And then I'll now say, so this is my normal statement of comprehensive income. And I have my 2,015,000. I have my 2,015,000. But I know that I have paid 130,000 in advance, a prepaid expense. And we know we subtract that. So I'll come in, then I'll say minus 130,000, and I'll remain with 1,885,000. This is when we do the normal statement of comprehensive income. Now, let's assume that we are doing that other statement of comprehensive income where we are doing the correct net profit calculation. Okay, let's assume we're doing the correct net profit calculation. If we are to do the correct net profit calculation, I would therefore come and say, directors' fees. I know that when we recorded the entire 2,015,000. We recorded the entire 2,015,000. Therefore, it means we overstated our expense, which decreased our profit. So to correct that, I'll come in, I'll add the 130,000. That's 130 there, Mr. Simbi. Okay, let's see. So we come back and we say 130,000. We would add it to the correct net profit calculation. All right, because we would have overstated our expenses, thereby decreasing our profits. In the statement of financial position, that is your balance sheet, in the statement of financial position, you're now coming, it's a prepaid expense. So it comes to trade and other receivables. And we're coming here, remember, I'm just going to write prepaid expense. All right, so then you can see what I'm recording. It's a prepaid expense, and that's my 130,000, like that. That is what we'd have done with this particular adjustment. I hope it makes sense. Until next time, cheers, enjoy your studies.